Last week was not an overly interesting week relative to the previous week's exhausting lineup of major events. This week began with still more positive COVID 19 vaccine news to propel the markets. Here to elaborate more is our chief equity strategist and economist, John Blank. So, John, based on the latter, does it seem to you that investors are more focused on vaccine news and willing to look past the recent spike in cases?
Terry, that is a statement that probably has a time date. I think the first wave of news about the vaccines was wholly positive, and the efficacy numbers were stronger than people expected, and that got priced in. But now I think people are also not pricing in what's coming, which is a long winter of poor economic performances. So, like I said, there's a timestamp on that comment, and I yet to be convinced the second part of the statement that the winter shutdowns is not going to play a bigger role going forward.
So what we have seen tactically from stock traders is apparently sell the growth tech stocks for a handsome profit and then rotate to mobility stocks. Looks like the stay-at-home names share prices have peaked and rolled over about midsummer. You say this always happens. Why?
Yeah, it does, Terry. I mean, this is, the typical thing of trying to time markets very hard because you can't know when the institutional traders start to look at something down the pipe. Sometimes they'll look out 6 months, sometimes 12, sometimes 18. And of course, since there's a lot of different institutional traders driving markets and algos, news algos and everything, mixing together to set the index level, very difficult to figure this out. So, for example, the stay-at-home names were being sold starting in June and running into October. So big institutional players, bit by bit, were rolling out of these stocks the last 4 months. You probably didn't get news of it. They're not going to go and advertise they're getting out, but you can look at the index fade and see that for yourself that they were certainly doing that. So this is the problem. The big run after the election on the vaccine news, yes, I knew about it. Yes, I advised on it, but I said late November, we're not even in late November. We're talking November the 19th. So again, that was 2-3 weeks of pre-data, small sets of data that drove the market up. This is typical. You cannot figure these things out in advance. Someone's got the news that you don't have. Someone paid for it, and someone's got a lot more money than you to get that news. So forget about it.
So are these mobility stocks that would benefit from the economy reopening?
Mobility stocks is, airlines. It's food stocks, going to restaurants, basically moving out of your house and interacting with crowds of people. It can mean events. There's a whole, level of mobility, but the basic idea is moving around is what's not happening right now. And those stocks will get a bid. Cruise lines be another great example.
Based on the rotation, have tech stocks fallen out of favor now?
Terry, I take that with a grain of salt. There's certainly being, again, some savvy traders are rotating part of their positions out of names. Certainly those super overvalued ones like the Zooms have got hammered. But there's a lot of names, let's throw out a couple of Applied Materials or things like KLC Corp. These aren't overvalued chip names. They're in the 19-20 PEs like the S&P itself. So I think you got to look at PE ratios. And if they get into 40, 50 PEs and they're a tech stock, I would be not holding on to that stock.
How do you feel about the way the Q3 earnings season is shaped up?
Q3 earnings may be the high water mark for 2020, Terry. I'm not convinced that Q4 is going to see a very noticeable but small decline as the economies kind of stagger around here. And I also think the markets will go up and not down on this because the markets are looking to the summer now, not to the winter. And so that's the thing, not to get bearish in the face of fundamental news. It's a lagging indicator, not a leading indicator. And the leading indicators are out next summer.
U.S. Treasury yields seem to have sprung to life all of a sudden. Where do you think they go from here?
Yeah, they sprung to life, but they sprung to life in a kind of a short covering way. They're not above 1%. And frankly, the Fed's not moving off zero until the end of 2022. So I think, like previous periods, you're getting a tactical rotation back up to a certain technical level. My guess is 1.5 is where we end up this upside, and then we'll roll over and go back down again.
So you're actually looking at three large cap stocks now: BMW, NXP Semiconductor, and IDEX Laboratories.
Yeah, these are worthy names to think about. They're number one ranked, so let's talk about them. I mean, BMW. Why a bit of BMW? Well, cars are doing well in this environment, right? I mean, this is an environment people are buying cars like they are buying homes. So BMW is a name you should look into, and they also have a decent, starting to get the electric car going, and there's some tougher environmental rules in Germany that are going to help them to get in the game with Tesla. They're not there yet, but they will get there. NXPI is a Dutch name. Why I like this is the chip stocks are doing fine, but the name lists in an ADR, lists in Europe, so you can probably get a better valuation on NXPI as a chip stock that's not overvalued that you can play now. And the IDEX Laboratories, this is an instrument game, medical instruments. I don't know enough about their business products to elaborate, but healthcare generally has been overlooked in this rally. So again, you can position on a 12 to 18 month look into a place like IDEX Laboratories and do pretty well for yourself.
Our chief equity strategist and economist, John Blank, on the latest news affecting the market and the economy. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.